And next thing we know, we had a 2-page article in the Sunday Time in March 97, which absolutely blew up our little shop.
Welcome to the Legacy Branding Podcast. I'm your host, Laura Beauparlant, here to guide you through the journey of selling your business and building a personal brand that leaves a lasting impact. On the show, we'll explore real-life founder stories, expert insights, and actionable strategies to help you navigate the transition, avoid post-sale crisis, and create your impact-driven legacy brand. Whether you're thinking of selling, building to sell, or already on the other side, this podcast is your go-to resource for making your next evolution your best one yet. Let's dive in. Today, I'm excited to welcome Eric Malka to the Legacy Branding Podcast. Eric is a seasoned entrepreneur, brand builder, investor, and author with over 30 years of experience in the luxury consumer goods space. As co-founder and former CEO of The Art of Shaving, Eric helped pioneer the luxury men's grooming industry, taking the brand from a small Manhattan shop to an international success acquired by Procter Gamble in 2009. Since then, Eric has dedicated himself to mentoring entrepreneurs and investing in early-stage businesses through strategic brand investments. Welcome to the show, Eric.
Well, glad to be here.
So I was doing some digging and I was learning more about the art of shaving and read that it was started in your apartment kitchen with your wife, and then it became this international brand. And I'd love to know what inspired you and your wife to take the leap.
Well, by accident, I walked into the men's grooming industry. I got a job for a distributor of men's products from England, and that was my introduction to the category. At the same time, my wife was studying her passion for aromatherapy and alternative medicine. And one day she made me a pre-shave oil based on what she was learning in school because she knew I had skin irritations. And I was already started to use a brush and a cream from my job. And I had the best shave of my life. And we thought maybe there's something here. There's a business to be created. So we sold our car and we scraped a few dollars to open a tiny little store on the Upper East Side of Manhattan, I should say. And looking back on that, it was nothing short of a miracle to open a store in Manhattan with $12,000.
Yeah. When was that? What year was that?
1996.
Okay. And so you sold in 2009. So we're going to dive into that. But what do you think drove this incredible growth in the brand that you built? Do you have any secrets?
Well, we struck a chord. We execute, this is where one of my principles is that ideas can be very simple, but execution is everything. And I think that is really relevant in our case because, opening a shaving store to me was not a brilliant idea. I saw a dozen of them in my travel to London for my job. And I thought, hey, it could work in America. However, those shops in London were, from the 1800s, and they still looked like they were from the 1800s. So they weren't, we said, why don't we make it more relevant to the American modern consumer? And I think that's where the execution piece started to happen. And my wife is a brilliant creative force of the business. I'm the strategic side. And together, somehow, with great instincts, we executed a beautiful brand, opened a first store specialized in shaving called The Art of Shaving, and really hit a chord with the American consumer in New York. And that's when that's the spark that can create a wildfire, right? It only takes that. So it started from a spark and then continue executing and moving forward and building and getting lucky and not making too many errors along the way helped. We were lucky.
Yep.
I often,
Right. So did you open more shops? Did you sell products? What was the growth
So
after opening that first shop?
the first shop was opened with selling products from my job. We had no money to make our own products or to buy brands. So I was able to get products from my job. But 6 months after we opened that little shop, something extraordinary happened. We had a barber event in our store, and the New York Times decided to cover it. And next thing we know, we had a 2-page article in the Sunday Times in March 97, which absolutely blew up our little shop.
It would.
We went from doing about $10,000 a month to doing about $10,000 a day for a few months. And we were naive enough as a 28 and a 22-year-old. We already had started looking for a location. We had identified a second location on Madison Avenue and 46th Street for which we had no money to build. But that article gave us enough cash to be able to open that more prominent flagship store that included barber shop in the back of the store and was located in Midtown, where, millions of men walk by our window on a daily basis. And that was a huge success. And that allowed us the resources to create our own brand, to really control our own destiny, as we used to call it. And that was a game changer. We went from being a retailer to becoming a brand, a consumer brand. And that was a big game changer. And at the exact same time, while we were in the final stages launching our own brand, Neiman Marcus called upon us and asked us if we were interested in opening a shop in their downtown Dallas flagship store.
Hey.
We thought about it for about half a sec.
And did that lead to other retail stores?
Yeah. So then, off to the races. I quit my job after the New York Times article came out. I quit my day job and dedicated my entire focus on the art of shaving business. In 1999, we opened the store in Wall Street. And in 1999, we opened a store in downtown Dallas on the men's floor of Neiman Marcus. And that led to selling the brand in all of the Neiman Marcus stores, which really made us think about wholesale for the first time. Wait a minute, we don't have to have just our shops that cost a lot of money to build. We would have to raise money. And we thought maybe it's a good time to pivot and to distribute our brand. Now we had 4 stores that were very profitable, creating great cash flow. And we launched our wholesale business at a really very lucky time, because the metrosexual term was coined in 1994 in London, but didn't make its way to the United States until 2002, when it really went viral.
Yeah.
And at that point, we were the leading luxury men's grooming brand, because it was a category of one brand. So we had very little competition. We were by default the first.
Yeah.
But having Neiman Marcus was a great credential for the brand. And we started contacting all the premium retailers around the country. And because of the viralness of the metrosexual movement led by David Beckham at the time, the poster child for it, all the retailers wanted our brand in their stores because they felt men's grooming was the next big thing in the industry. So we rode that wave for a while and grew the business and brand awareness. We had over 800 retailers carry our products by 2003. And we then realized they were just, they wanted to have the category, but they were not really behind the category. So we thought we wouldn't be able to scale our brands through that channel. It was a great channel to get us on the map, but from a revenue growth and scale, it was not going to get us there. So we pivoted again and created a retail concept format that would be able to be living in a shopping center in the rest of America. New York City is a street town, but the rest of America is really focused on the mall format. So we created a small jewel box, smaller footprint that we could really scale rapidly across the United States. And we tested it. We raised money in 2005 and built 12 stores around the country. They did extremely well. And we went out and raised a bigger Series A round and started scaling like our life depended on it.
Wow.
And then we exited. So
Yeah.
It was very, I look back on it and I say 12 years from kitchen to strategic acquisition with a name that is known globally is quite extraordinary. I realize that today. It's not something that happens every day. So we feel very
Yeah.
fortunate and blessed. And that's what the book is about. It's called On the Razor's Edge. And it's really meant to tell this fun journey of an ordinary guy that took a Greyhound bus from Montreal at the age of 17, arrived in New York City as an undocumented immigrant with $100 in my pocket, and 24 years later, selling my company, my brand to a consumer goods giant is a fun story, but I wanted the book to be more than that, to be filled with lessons and principles that would potentially, hopefully, help young entrepreneurs avoid some of the pitfalls and increase their odds of winning at the game of startup.
Well, and you mentioned grit and prudence and timing, and you were just talking. I mean, I think timing with the metrosexual term, and that feels very much like timing was in your favor.
Very
So you
much
talk
so.
about those being ingredients for success. How do you think those played a defining role in terms of the grit? And we talked about timing, but grit and prudence, like talk about those.
Well, listen, if it wasn't for grit, not only would I have given up many times, I wouldn't have started in the first place. Grit is very important because grit is about, it's more than resilience. Grit is about running a marathon, understanding that success is not a 3-year journey. It's a 20-year journey, depending on when you think you started and finished. But, grit is about pursuing your long-term goals with determination and focus, not getting sidetracked by other businesses, and really running a marathon. Unfortunately, a lot of entrepreneurs, when you look at their business plan, they're running a sprint. They're trying to get there in year 2. And that can be the kiss of death. That's why what I recommend to entrepreneurs is a little different conversation than what we've been hearing from thought leaders in business, which have been usually successful. And that is that going a little slowly in the beginning can pay off in the long term. A little bit like a marathon. If you try to bolt out of the gate, you might hit a wall at mile 3. You want to keep that energy until you're towards the end, and then you can really reach deep inside and take it to the finish line. And I think that was the blessing for the art of shaving. We started with $12,000. Had we started with $1 million, we might have failed in 24 months or less. So we were I was forced, and I also came out of a third business that I failed in miserably. So I was a little traumatized. When I started the art of shaving, I was a little insecure. So I went a little slowly. I'm like, what's the smallest business we can start? And that's where as I look back and reverse engineered some of the principles and elements of our success, thinking very big, but starting small is one of my recommendations, and learning the cadence of your business, right? Don't try to fly right out of the gate. You're crawling, you're walking, you're running, and then you can fly. There are stages, and those stages can be very, very quick depending on the person and the situation, but don't try to skip the stages because that will be a problem, I think.
That's a great piece of advice. And I think having failed once before, it sounds like that really formed how you started this next business. And
Yes.
I think that's important for people to hear, that you didn't just, like, your first business was this huge success and you sold it, and because that can feel intimidating. But the fact that you, as you said, you failed miserably before and tiptoed into it with
Yeah.
a bit of reservation.
Of course, it was my 4th business. The art of shaving was my 4th business. My first one did well. It was fun. It was my first. I was 19 years old. I was doing well. My second one was huge. And the third one, I lost everything, right? So what that did for me again was saying to my wife, who shared my high ambitions, what kind of business can we start with $12,000? And we thought maybe a little shop. She could be the manager of the shop while I keep my day job. She was also illegal. I was illegal for a long time in the US. So that's how I became an entrepreneur, by the way. That's an important factor. I couldn't get a job, and I was told I could have a company. So that was my foray into entrepreneurship.
It's an interesting journey to entrepreneurship. You don't hear that every day.
I later found that I'm not employable anyway. So that really saved me some grief.
I think that's a common trait with so many entrepreneurs is that we're unemployable. Whether we were before we became entrepreneurs or not, that's
But I
that's
learned
not
to.
clear.
I did have a few jobs in my days, not for long, but I did have a few jobs, and they taught me very important lessons about company culture, for example, and leadership.
Yeah.
One of my motivators to become an entrepreneur is because I wanted to lead. I couldn't follow, I couldn't follow my bosses. They were not inspiring me. If they had, I'd probably still be working for them. And then the company culture, I hated my jobs. And so many people hated their jobs. I said, I'm going to create a company that people, they're happy to go there. And this is something we were very, very proud of. I remember at the height of our brand's life, people would call us and say, I want to work for your company because my friend works there and she loves it.
Mhm.
So to me, that was so fulfilling to hear. And I learned that from working for the wrong people.
And I think that is probably only something we can learn when working for somebody else is whether you really like somebody's leadership style or the company culture, or you absolutely hate it and you're like, this is terrible. I know now what not to do when I run
That's
a
right.
company.
Also, when my wife and I have always been into luxury goods and beautiful things, and we would go into these high-end stores when we couldn't afford the merchandise in them. And I was always shocked how poorly people were being treated by their staff. And I said, one day when I create a luxury brand, our customers are going to become like our guests. We're really going to embrace them. And I continue learning that from Neiman Marcus, how they call it hugging your customer, not physically hugging your customer, 'cause
That might be weird.
but the metaphor of hugging your
Mhm.
customers to really care for them. So that developed one of my pillars in business, which is, to be obsessively consumer focused. If my best employees dared to do something that benefited the company at the detriment of our customers, they would be in real trouble, real trouble. It's always the customer first, and the company will get a great payoff, if not now, eventually.
Yeah, exactly. So let's go back to that big payoff when you sold the company. That was a good
Well, it's
segue
all
to
relative, right?
yeah, exactly. You sold to Procter and Gamble, and that's a monumental milestone, one that so many people might only dream of. So what was that experience like? And did you learn any big lessons from negotiating that
Oh,
acquisition?
yes. Oh, yes. Unfortunately, I learned it the hard way, but there were great, great lessons. Entrepreneurs, if they are lucky enough to be in the position I was in to sell my company to Procter and Gamble, it's basically a child facing the dragon. In my book, I call it the chapter "Untrained to Slay the Dragon," basically, which is basically what you're in front of professional M&A experts that do this every day, and you've never been trained as an M&A banker. You may have M&A bankers helping you, but they're not really helping you. They're also helping themselves, and they have a relationship with the buyer, so it's not a complete team effort, if you know what I mean.
Hmm.
And it was the dream when I was in Gillette's corporate offices, and the president leaned over to me and asked me if I wanted to sell my brand to them. That was a moment where you pinch yourself. This is where my entire life came to a destination point. So that was incredible. That was a dream come true, floating out of the office, trying to act all cool and collected, crying to my car.
Yeah.
So unfortunately, when we started due diligence 6 months later, the financial crisis hit in October 2008 while
Right.
P&G were doing due diligence in my office. The world was crumbling around us and our business was thriving. And all of a sudden, luxury retail was down 25% overnight. So that was a very challenging time. That was one of the most stressful. And that's, again, little grit never hurts in that situation. So long story short, I found myself going from selling my company to talking to a bankruptcy lawyer. Okay.
Wow.
All right. That's, I I always thought being an entrepreneur is like being on a roller coaster, but this felt more like being thrown out of an airplane without a parachute, right? So
You did successfully sell the business. You got through
very at
that
that point, no pun
financial
intended.
crisis, which, yeah, that was that, you know,
Yes, it did. So, yeah, yeah. Well, we took a haircut. We probably took a 20 or $30 million haircut,
yeah.
which is a lot. It's a hard pill to swallow, especially when it happens at 11:58. Right? We could have had. We focus on the blessings that we did have, so I got over it.
And it's a lot better than the bankruptcy side of
A little
things
bit
that
better than the
would have been.
bankruptcy. Yeah.
Just a little, just a tiny
Uh,
bit. Yeah.
I don't have a lot of experience with bankruptcy because of that, but I'm not unhappy about it.
Yeah.
And
So
that's not a fun process.
so you sold the business, and then it was a few years later that you started strategic brand investment in 2014. So there was a gap between the exit and
Yeah.
starting this. How did you spend that time? I talked to a lot of entrepreneurs who go through a lot in that time, like existential crisis and who am I now? And what was that experience like in that gap for you?
We call it the morning after, right? It's the morning after syndrome. You wake up. In my case, I woke up the next day. My agenda was clear for the next 10 years.
That's a weird feeling.
And I had a newborn child. He was literally a week old. And I had an 18-month-old or 21-month-old. So I realized that the universe had handed me something very unique, an opportunity to be really all in with my kids. And having had a father that was not very present for me, that felt like my mission in life at that point. So I'm a bit of an analytical guy. I'm a strategist. So, when I have emotional problems, I open an Excel worksheet. So I built, for me, the morning after was just the way I think about business strategy. What are my priorities? What's my DNA? What's my brand DNA, and what are my 3 objectives in life? And where I landed was my health, which I was pretty healthy, but I had neglected it for a long time, like many entrepreneurs. So people are surprised that my health came before my kids. And the reason for that is because without health, your kids are not going to spend quality time with you.
Yeah.
So
Exactly.
my health, mental, physical, and spiritual health became my focus. My children obviously were my priority, and my investments. I needed to now learn new skills to learn how to manage the assets we were so fortunate to acquire through this business success. So that's how I started living my days, and my life was around wellness, children, and investing. So there you go. By the way, entrepreneurs that exit successfully don't get a lot of empathy about the difficulty of the transition. It's like, come on, bro, you're living the
Oh,
dream.
sorry.
I'm
Sorry
not,
to hear
I'm
you
not,
just had this. Yeah.
uh, I'm not, I'm not going to cry. But the reality is that my wife and I, it was a tough transition to go from running an exciting global brand with 500 employees to managing 2 kids at home. So that became, a shock to the system. What I understand from the brain is that the brain doesn't differentiate that much between a positive transition and a negative transition. It's a shock to the system. Your life is being turned upside down. Fortunately, we were in a good place. And again, wellness, mental health was part of my wellness routine, whether it was therapy or I tried everything. We are into alternative health. So we did a lot of weird stuff, but it was an incredible journey it was not just becoming healthy. It included learning. I started learning intensively about business to try to understand business better, to become a better leader. I started to work on my traumas and my psychological insecurities or what have you. I started working out, exercising to have a stronger body. And I realized that those are really essential elements to succeed as an entrepreneur. I wish I had done some of that work before, although it could have cramped my style, to be honest, because I was so reptilian in my pursuit to succeed. In my book, I talk about the chip on your shoulder, which is the greatest motivator of success, in my opinion. And I had that. I know now from looking back on my youth that I had self-worth issues, and I thought to myself unconsciously, I'm going to prove the world wrong about me. So that became my driving obsession. And I think that when you're a little bit more balanced and stable, you, it might cramp your style, if you will. So that's what I did, and really learning to become an investor. A lot of entrepreneurs make mistakes managing their assets after they exit. Ego can creep its weary head when you least expect it, and having a big success is the magical element to inflating your ego. So grit and prudence and timing were also the key elements to investing. If you freak out when the markets are shaky, you got to stay the course, and you got to be prudent. You can't just be, writing $1 million check to your cousin's boyfriend because he has a great idea for a nap. You might get into
That's a
some
great
trouble.
example. So you transitioned into strategic brand investments. You're mentoring entrepreneurs, you're investing now in early stage businesses through this. What was that like? And when did you learn that that was a calling or the next step in your journey?
Well, when I started learning about investing, I knew that being a venture capital, an angel investor or VC, whatever you want to call it, was my dream. I've always wanted to help people, whether they were my employees, my vendors. I've always had a need to help. And when I raised capital for the art of shaving with a private equity firm, I brought into my business some real wolves in sheep's clothing. They were horrible people. And in my book, I'm a little cheeky about it. I said, I didn't know they were wolves, but they didn't realize I was a tiger, right? So I fought back really hard, but it was horrible to not be aligned with the investor. And when I started strategic brand investment with Miriam, my goal was to be a different type of angel. And I really empathized with how lonely, how difficult it is to be an entrepreneur, especially in the early days, and how they're being overlooked by the real investment community because, they have shareholders or they have to make a living. So their primary concern is themselves. Whereas SBI was really built around the notion of helping with the intention of potentially making money, which we have. But that wasn't the driving factor. Financial gain was not the driving force. Being fulfilled and having fun was really my guiding principles. And the purpose was to help the next generation of entrepreneurs achieve their goals. So when we created SBI, we really wanted to be more strategic than investment. Therefore, we called it strategic brand investment because we bring real expertise to those who don't have access to that expertise, whether it's my wife's formulation, product development, R&D knowledge, her creative side of the business, the branding, or on my side, coaching CEOs and focusing on strategy, on brand strategy, on how to conquer the world and that sort of thing. We associate ourselves with investment companies that see us 80% strategic, 20% money. We're not here to write huge checks, but we'll try to have a huge impact on your business. That's our business plan.
And I think you can have people write you the biggest checks, but if you don't have that strategic support, that money can be gone and have nothing to show for it.
That's right. And that's why we play in the area where they've proven their concept, but they're not ready to get in real investors on board. And if we can help them bridge that gap, that's our job. And we have the connections to VCs around the country, but we have to bring that company to that point where it's an easy conversation. You're investable. You have a scalable business model. You have what it takes. You're ready. And now we bring in the investors that we make introductions to the company with. So that's really a little bit how we do things.
I love it. So this podcast is called Legacy Branding. So I would love to ask you, what does legacy mean to you, and what is the legacy that you are creating?
The two big areas that our family legacy is about is natural health and entrepreneurial. So, we've been lucky to intertwine nature and together in our businesses, and we continue to do so in the brand that we invest in. So, I would love our legacy to be that we had a positive impact on the entrepreneurial community, and that we somehow changed that community for the better.
I love it. And what a beautiful model for your kids that you're creating.
Well, they're teenagers, so I'm not a really good model right now, but hopefully they'll catch up to it. It's
Yeah, I know. I have
you know,
teenagers too. So how can people connect with you, learn more about you, order your book, find out how they could potentially work with you if they're in that sweet spot that you just mentioned?
well, ericmalka.com is the easiest way to get to our website, or strategicbrandinvestments.com gets you to the same place, but it takes a little bit more typing.
Amazing. So I would invite everybody to go head on over there, connect with Eric. Thank you so much for being here. What amazing insights. Thank you for sharing your story. I love to hear of a beautiful husband and wife team working together. My husband and I are both entrepreneurs. We work in different businesses, but we've always supported each other. So it
Wonderful.
always, to me, is such a beautiful thing when I can see another couple doing something really amazing together and raising kids at the same time. So thank you for your insights, and thank you for being here.
Well, thank you for having me. You're a great listener. And I had the opportunity to tell the story in a different way that I have in other podcasts. So thank you for that.
Amazing.
It was
Happy
great.
to help. Thanks, Eric.
Thank you.
Thanks for tuning into the Legacy Branding Podcast. I hope today's episode has inspired and empowered you on your journey to building a brand that truly matters. If you enjoyed today's show, please subscribe, leave a review, and share it with other founders who you think would benefit from listening. And if you're ready to take the next step in building your legacy brand, visit our website, labcreative.ca, to learn more and book a call. Don't forget to join us next time for more conversations that will help you navigate your transition and create your legacy. Until then,